What's going on, guys? It's Kyle. Welcome to the Stockout YouTube channel. Today's video, we're going to be covering the SoFi stock, but most importantly, we can cover the overall market. Growth stocks had a really big pullback today, so they needed to cool off. But we have a lot of good information coming out with multiple companies' earnings reports, and I believe these earnings reports can give us better guidance of what type of earnings we may see for SoFi. So we're going to be talking about 5 other companies in this video, and this should give us a lot of information on what we should expect for SoFi heading into these earnings in the next 2 weeks, guys. And it's very simple. If you're bullish on the company and you believe SoFi is going to be, bashing through earnings, it's a great time to be buying this stock, right now around $19. If you think this earnings report is coming up, might be a little bit of a slowdown, might not see a significant guidance boost, wait till after earnings to buy the stock. The stock will most likely be below 19 if the earnings is not, a double beat and a raised guidance. So that's pretty much the best way to play it, guys. Be patient and wait till after earnings, or start buying now like crazy pre-earnings. But overall, in my opinion, I believe the diversification of SoFi into multiple business segments is really going to give them a nice earnings beat. And only if you enjoy this video, be sure to subscribe to the channel and don't forget to smash the like button. Be sure to drop a comment. Are you buying the SoFi stock right now on this nasty pullback today? And what is your price target for 2022? My price target is $55 or higher if we get that bank charter approval and they raise guidance for the full year. Let's get into the video. All right, guys, we know it was a nasty day inside of the market. There was probably 50 to 100 companies, over 5% losses. So don't be worried. If you had a couple of positions that were down today, it was just an overall cool down in the market. I mean, look at some of these drops today. Twilio, Robinhood, Twitter, Teladoc, Peloton. I mean, we're talking double digit, drops today. This is massive. I mean, we scroll up a little bit. Cloudflare, 5%. Upstart, Sentinel One, Fastly. Everything today was getting rocked. So this was a great time to buy dips on your favorite companies that you're bullish in, if you're heading into an earnings report. So it was just a cool off today. So, just be patient and the market will bounce back most likely next week. And we can see the S&P 500 red, Dow red, NASDAQ actually barely finished green. I believe this was because of like Google and stuff like that. And Russell really red. SoFi down about 3.5% today. It's actually bouncing back a little bit in the after hours, and I actually think I know why it's bouncing back a little bit. And we can see the volume was a little bit on the low end, about 17 million. 23 million is the average. So, this was a little pullback today, but compared to, 10%, 15% losses like some of these other technology companies, we actually held up, decent, compared to some of these other growth stocks. All right, guys, and we can see SoFi has had, a 7% pullback this week. I believe this stock was about to break $22 at one point. We're still holding up on the $19 range. This stock could easily go back to, the $18 range or surpass the 20. It just matters if we get, some news heading into earnings. Also, a small pre-earnings run-up could happen. So, I believe these are great buying opportunities in my opinion. Once again, we had a nice pullback on the entire week, and this downtrend could easily end at any given moment. But nobody can time the market perfectly, and all you got to do is buy in week by week, whenever you can. So I believe $19 is solid buying. So these are the dips that everyone has been waiting for, and you got to take advantage when they're there. Now, in the beginning of my video, I was talking about earnings, how this could give us, more insight and more knowledge on what to expect from our company. I'm telling you right now in this market, you have to be very cautious of what companies you are picking, because some companies are not performing anywhere near the expectations of, when we were in, heavy, COVID, with the COVID volatility. A lot of companies, were dominating on lockdowns, getting tons and tons of users to their platform. And now that the economy has really reopened, a lot of companies are seeing slowdown. And as we can see with Robinhood, shares tank as revenues fall way short of expectations, lighter crypto trading. So Robinhood is one of those technology companies that is seeing, the negatives from, the reopening, and they're really getting hit on that, crypto volume trading and losing a lot of users. Snapchat plummets 22% after missing on revenue expectations. Guys, this is an advertising company, and they were dominating in lockdowns as well, with users on their phones nonstop. Now that the economy is reopened, Snapchat is not hitting expectations. Two technology companies. Twitter is a little bit different. They end up gaining 5 million users in Q3, but they did miss earnings because of a litigation settlement charge. So, some type of, litigation. So Twitter did do a little bit better than Robinhood and Snapchat overall. And then the last company we're going to look at, Pinterest, posted 454 million monthly active users, down more than 5% from 478 million they reported in April. So this was their last earnings report back in July. But as you can see, all of these technology companies are taking massive hits because they are not performing as well in this, reopening environment. And you can see it. Every company is having problems. But check out this one technology company, guys. Why becoming a bank is paying off for Lending Club. Keyword lending, okay? With its 2020 deal to acquire Radius Bank, Lending Club gained a banking charter and also a means to cut costs, which I've been talking about in multiple videos, grow revenue, and position itself to offer tailored products. Lending Club delivered 93% sequential revenue growth in the second quarter, according to the July earnings report, due partly to the cost efficiencies it realized by bringing Radius Bank under its umbrella. And guys, remember, go to Pacific Bank Corp. SoFi is doing the exact same thing that Lending Club has already accomplished of getting that bank charter approval. I personally believe even without a bank charter approval, SoFi can still have a solid earnings reports. But remember, I've been talking about that keyword that every single company that I went over that they are not accomplishing, and that is guidance. Robinhood guidance, Snapchat, Twitter, Pinterest, all of their guidance have been a slowdown, a setback. And that's why you see these stocks falling off of cliffs. And guys, not only did Lending Club have a nice second quarter, Lending Club just smashed earnings today, guys. They reported their Q3 earnings. Record revenues up 20%, net income up 190%, raising full year outlook, guys. They just gave you that guidance raise. What's happening with the stock right now, guys? We could see that Lending Club is exploding on their earnings after hours, up 13%. This is what I've been talking about in all of my videos that we have to see. We need to see a beat on earnings, and we need to see the full year outlook 2022 raise guidance, guys. And also, if the bank charter comes in reach and we get that, that's going to be a ridiculous 2022 in the making. So guys, I'm telling you right now, I believe SoFi is a much different company compared to Robinhood, Snapchat, Twitter, and Pinterest. I believe SoFi is a company that people need in an economic shutdown or a reopening. It does not matter. This is a one-stop shop of finance. They don't focus on, just crypto trading, guys. They are well diversified. SoFi offers private student loans that they do not have right now. That's why they put their, guidance down a little bit for Q3, which I believe they're going to get those back, and 2022 guidance is going to get raised. Home loans ain't going nowhere. Personal loans is not going anywhere. Insurance is not going anywhere, guys. Student loan refinancing, of course, is what is going to be coming back, and that's something they can put into their guidance. That's something that's just waiting to be a boost for SoFi. So a lot of those companies I'm talking about have everything bad going for them right now because they had everything good going for them, last year. And we just got killed on our Q2 earnings, guys. The stock fell, 20 to 30%. It's time to beat earnings, just like we beat last earnings without that, EPS, one-time expense, and, get our guidance raised. This article just came out on Motley Fool. Want to get richer? Buy these top stocks and wait 10 years. I got a 5-year outlook on SoFi for sure. We scroll down a little bit. SoFi Technologies. Today, consumers have access to financial services through countless providers, including banks, credit unions, insurers, and fintech companies, but none of them offers a comprehensive portfolio that unifies all of those use cases. SoFi Technologies is the exception to that rule. Through a single mobile platform, it provides an end-to-end suite of financial products designed to meet its members' needs at each stage of life. SoFi breaks its business into two categories: lending and financial services, guys. Lending is what is going to get us to that beat this quarter. I'm telling you right now, guys, we are going to beat because lending is still firing on all cylinders. It's much different than those other advertising, technology companies that we just went over. The former includes student loans, home loans, and personal loans, while the latter offers money management, investing, and credit card services in addition to third-party insurance products. I went over all of these different diversifications that SoFi offers. In short, SoFi's mobile first platform helps consumers borrow, save, spend, invest, and protect their money. That convenience has helped this fintech add members at an impressive pace. We can see members have accelerated Q2 2020 to Q2 2021 to 2.6 million members. I had a couple of people ask me in the comment section, do I believe SoFi can hit 3 million members, this quarter? I don't think that is going to happen, but I do think we passed 2.9 million. And we can see that they just had 113% change year over year. Revenue growth 350 million to 625 million as of Q2 2021, 75% growth. This is a $2 trillion opportunity to disrupt these legacy banks, guys. So I'm telling you right now, I believe that the earnings report will be solid. They don't have to be a massive, massive blowout. It's all about that guidance. And that's exactly what Lending Club just did. They just had a blowout earnings and they had a massive boost with guidance. All those technology companies that we just reviewed are giving low guidance and the stocks are getting beat down to smithereens. If you made it to the end of the video, I want to say I really do appreciate it. I had to wait a little bit today to put out a video. I was trying to get some good news and I had to review a couple of earnings to get a feel of, these growth stocks, these technology companies. I'm telling you right now, when I saw that Lending Club beat and that boost with guidance, guys, it gave me more and more confidence that SoFi will be one of those few companies that actually have a successful earnings and the stock price drives even higher, guys. And let's not even get started with that bank charter approval. Nobody knows when it's happening, but it could be happening very soon, according to that preliminary timeline. Once again, if you enjoyed this video, be sure to smash the like button. Don't forget to drop a comment. Are you investing in SoFi stock right now? And don't forget to subscribe to the channel. Let's try and get this channel past 10,000 subscribers by the end of the year, guys. Once again, my name's Kyle. Hope you have a great day.